All right, good morning, trade pros. Welcome to our morning market update for Tuesday, October the 16th of 2018. This is George Papazov from Trade Pro Academy. All right, in today's morning market update, we're going to talk about a few things, actually a lot of things. Earnings, Uber set to IPO at a massive whopping valuation, and what that means for the taxi share business, or the taxi business rather, and some surprising investors that are trying to move into it. All right, we got a lot to cover. Let's get started. Let me turn down this trading squawk for a moment. Sorry, trading squawk. I'll let you finish in a minute. All right. So earnings season has kicked off already in full force. Last Friday, we had some bank stocks report, and this morning we had some more. All right, Goldman Sachs this morning reported a third quarter revenue number of 8.65 billion on 8.37 expected, which is a beat, and earnings of $6.28 versus $5.42 expected. So that's a strong beat on Goldman Sachs, and that's going to infuse a little bit of positive momentum into the equity market. I feel like from here, we're going to see if we could wipe some buy stops. We've sold off a significant amount. Yesterday, we looked very bearish as well, but weren't able to press through the lows and to continue lower. So what today we could see is a little bit of a buying or relief rally, as they call it, as we head into midweek, which is tomorrow, and that's the Federal Reserve meeting minutes for their September 25th, 26th meeting when they hike rates. All right, so we're moving in the very important part of the week here over the next 48 hours. Also, Goldman Sachs average, hang on a second, where was the number I wanted to share with you? There's a lot reported on these statements. Institutional client services, 3 billion. They also break it down by region. All you need to know is Goldman Sachs beat, because there's a lot of info here, and I'll give it to the trading room afterwards. All right, Morgan Stanley reports Q3 earnings per share of $1.17 versus $1 expected. Huge gain. That's a big jump in profit. Revenue is up 9.87 billion versus 9.53 expected. So strong sales there. Morgan Stanley's equity sales and trading revenue hit 2 billion versus 1.9 billion, that's a beat. That's really good. Fixed income sales and trading revenue 1.2 billion versus 1.2 billion year over year as expected. So Morgan Stanley does really well as well. All right, so Morgan Stanley, Goldman Sachs come on positive before the bell, and that's going to push a little bit of market sentiment to the upside, to the bullish side, even if it's temporary. All right, we're going to see some relief there, some much needed good news since the last week and a half we haven't had any. All right, Netflix is set as the first big tech name to report today after the bell, and it's expected to release $4 billion of revenue on 68 cents of earnings per share. And the big thing to watch for here, Netflix, is the add-ons, or the streaming subscriber add-ons. They're looking for 674,000 domestic additions or new subscribers and 4.5 million in international during the third quarter, right? So they're looking for some big numbers. That's huge. Those are big gains. And for that reason, because it's a really big and closely watched report, and Netflix is a massive company, it's very volatile, options imply a 10% move. So it means if you buy a call option today, right now, the price is so much higher than normal. It's elevated due to the fact implied volatility is higher. We know that after the bell, we're going to have massive moves. So if you think about it and you say, Netflix is always beat, let me buy a call option. And you buy a call option as a newer trader, and it beats, and you're like, I can't wait to open the account tomorrow and see how many millions I made. This is so easy. And you realize you haven't made that much at all, because it needs a 10% move alone just to offset the premium you're going to pay for it. Because right after earnings, the unknown factor is gone and volatility flushes out. The higher the volatility, the more expensive your options. So you just paid a ton of money for something that's going to be worth guaranteed half to a quarter of the price, just literally seconds after the earnings announcement. All right, and yeah, you might get lucky and hit it big, and it might go higher, and you make some money. But at the end of the day, you don't know what you're betting on. It's gambling. Trading earnings before the bell is gambling. There's no other way to put it, unless you have information, and then it's illegal. It's gambling, and you're overpaying to gamble. So just a heads up. I know a lot of people love to trade Netflix options ahead of the bell, and I don't see too many of the same people continuing to comment over the years on their trading on Netflix, which means some of those people disappear from markets. All right, companies down 12% since the last earnings report, so keep an eye out for that on Netflix. Let's do a little round over of the markets. In Asia, Japan's up 1.3%. Hong Kong's flat. China's down 1%. India's up 0.9%. Seeing some modest gains here in Asian markets, except for China, which is still down. They had some bad data this morning. All right, in Europe at midday, London's down 0.3%. Paris is up 0.3%. Frankfurt's up 0.4%. So you're seeing mixed markets, but some slight gains in the European session as well. And in the United States, Dow's up 0.6%. S&P's up 0.5%. Nasdaq's up 0.7%. Nasdaq's excited for this Netflix report, and tech stocks are also excited and watching it. And if we're going to rebound here, technology is going to lead the way. All right. Here's some cool stats. The S&P 500 has been up in 7 of the last 9 earnings seasons, which is pretty much a year and 3/4 because there's one earnings season every quarter. So there's 8 in 2 years. All right. Climbing an average of 1.7% during the 4 weeks after the earnings kick off, after the banks report the kickoff. After banks kick off the earnings season, banks usually go first. All right. That's according to the Dow Jones market stats. Pretty cool stat. So you're seeing we're running into some bullish momentum here. The question is, will the Saudi Arabia situation unfold more negatively? Will there be more trade war negative news to come out? How will the Fed meeting minutes look? Those are the kind of things you got to start asking. And does that outweigh the traditional seasonality that we've seen? So far, I'm going to say I expect a little bit of rebound today and maybe even tomorrow. But it's very important after the Fed meeting minutes to see how the market digests that. I can't predict beyond that. Heck, I can't even predict what's going to happen the next second. The moment you try to predict something is the moment that you move out of the winning mindset, because now you're giving yourself a chance to be wrong. Whereas without predicting, just looking at momentum and riding it, you're not giving yourself a chance to be wrong because you're going with momentum. All right, crude oil's down 1% today. Gold's up 0.2 at 12.33. Bitcoin up 0.1. Fidelity Investments opened a new unit called Fidelity Digital Asset Services. And the CEO, Abigail Johnson, she said that her goal is to make digitally native assets such as Bitcoin more accessible to investors. So you're seeing a new institution come into this crypto space, and that should be exciting for cryptocurrencies, except Bitcoin's not really up that much. It's kind of still hovering around that mid-stack 6,000 range, and we're following it closely. This morning at 9:15, we're going to have industrial production numbers. 10 a.m. the NAHB housing market index, the NAHB, and I like to put a Middle Eastern spin to it, even though I'm Bulgarian. Hey, that could be a Bulgarian spin too. You never know. 10 a.m. we have JOLTS job openings, labor turnover survey. That's what it stands for. That's coming out at 10. That's an early look at employment. And then 4 p.m. we have the TIC, Treasury International Capital, which I'm not going to be around to trade, so it doesn't matter. Now let's get into the important update of today. I want to ask you guys, am I making these things too busy? Should I focus on 1 or 2 things and expand on them more, or do you guys like the rapid fire preparation for the start of the trading session? I'd like for you to comment below, please, because if you comment, I could use that input for a future. If you don't comment, then I'm just going to make assumptions. And you know what they say about assumptions? They make an ass out of you and me. Assume, ass, you, me. Anyways, Uber received the Wall Street proposals to IPO in 2019. How much do you think Uber is going to be IPOing at? This is mind-blowing. Marky, you want to take a stab at it? Oh, so in billions. So it's 100. I'm not gonna make you guess. I would never guess. It's a wild number. $120 billion valuation. $120 billion. All right, that's nearly double their last fundraising round. When companies fundraise, it gives them a new valuation as new investors come in. All right, nearly double the last 2 months valuation, and more than Ford, General Motors, and Fiat Chrysler combined. Wowzers. All right. Here's an interesting part of this. So this is going to be 2019, an Uber IPO. There's going to be a lot of hype. It could be a really massive IPO. And I think we're going to sell it when it comes out. I think we're going to short it. But anyways, the point is, Marblegate Asset Management bought 300 medallions. A medallion is what a taxi operator needs. It's a license plate to own a taxi and operate it, basically. All right. There's a company that's trying to revitalize that industry. They bought 300 medallions. They paid $50 million. On average, some of them, they got less than 200,000. In New York City in 2013, a taxi medallion was $1.3 million at the height. That thing has dropped magnitudes of what it used to be. It's literally fractionally of what it used to be. And that's because of companies like Uber, Lyft, and other ride sharing and ride hailing companies. So it's an interesting time in the industry. We're seeing hedge fund money starting to come in. We know hedge funds are very terrible at picking growth opportunities. We've seen that in the last 5 years. It's not an opinion, it's fact. It's unfortunate. We've seen a lot of them shut down. So the thing here is, who is this hedge fund? If you guys want to read up more into it, it's called Marblegate Asset Management. What alliances and partnerships do they have, and would they try to somehow fight against Uber's operation? I'm going to tell you this, they're not going to win. Uber's here to stay. It's not going anywhere. The question for Uber now is, how could they get profitable? They give away a lot of incentive to drivers. They don't pay them that much, all right? Drivers are getting frustrated because they're getting less take home than what they used to, all right? They're depreciating and really ruining their own cars, and they're getting small reward for it, all right? And the question is, how can it go on for longer or not? And that's what Uber is going to have to deal with, and that's before an IPO. When you go IPO, costs increase. Yeah, you could fundraise some money, but you can't run at a loss forever. This is where I was watching Shark Tank yesterday, all right? And, you know, sometimes I like to watch some TV to unwind. Watching Shark Tank, and this girl gets asked, she was making something like $10 million a year or whatever. And she said, I'm actually negative cash flow. I'm losing money. I'm bleeding money at that much revenue. And she was asked, well, what are you going to do to, you know, what are some strategies that could, or revenue streams that you could use to offset it? She's like, right now, I'm not focused on the revenue part of my business. I'm like, what? My face was the exact same face as Damon John, Mark Cuban. We all kind of just did this. I felt like I was there in the room. I was like, what? And I think that's kind of the trouble that's led to a lot of these crazy asset valuations out there. And it's a technology company. We're just a tech company. The technology is worth money. I think that kind of attitude is what companies struggle with. But at the same time, Facebook's pulled it off. All right. So I'm just giving you guys both sides of the picture. I find that enormously troubling as new entrepreneurs come into an industry and think that you don't need to worry about revenue. Well, good luck getting investors like that. There were 80,000 ride-hailing vehicles in New York City. 80,000 Uber-like ride-sharing vehicles in New York City, and just 13,500 taxis. So I think the industry is kind of done here. Finish this off in 30 seconds. The U.S. government is reporting $779 billion deficit for the United States for 2018 so far, estimated at over $1 trillion. That's the most in 6 years, since 2012. All right, when it topped $1 trillion, that's the last time it topped it. Now, normally in a booming economic cycle, you have tax revenue to start to pay down some of that debt. However, the Donald Trump and the Trump administration provided tax cuts. But that's not the case at the moment. In addition to that, the interest payments on debt, think about who has the most amount of debt. It's not you, it's your government, if you're the United States. And for me, it's not me, it's Canada. It's usually your government that has more debt than you, hopefully. So when interest rates go up, that's why Donald Trump doesn't want the Fed to raise rates. Yeah, economic growth, but you know how much money they're going to have to pay out of an increased amount on all the debt that the U.S. owns? A ton. Interest rate payment increases are the single biggest reason that this budget's getting killed, along with taxes, all right, and military spending. Like, you spend, and then the budget comes out negative. Everyone's like, oh, wow, what a deficit. Yeah, honestly, does that surprise you? Doesn't surprise me. It sounded like a deficit. The question now is, can we recoup some of that from productivity and economic gains? All right. Or the other question you could ask is, without these tax cuts, what would the market have looked like? That's another question. So it's never cut and dry, not in economics. All right. Economists spend years getting a PhD only to not know things with certainty. And that's the truth. All right. That's what we got for you guys. So watch for that. That's going to affect the income market. Watch the yields. Today, I think we're going to rebound. Watch bank stocks, Morgan Stanley and Goldman Sachs. They're going to be probably leaders. Watch the XLF ETF. That's your financials rather. See how they're leading the rally up and correlate with those, and watch FANG, and you should be in a good place. Buy dips early on. See if this momentum has legs, And then if it doesn't, start the sell rallies in the afternoon. You guys manage your risk, TRADEPRO. I know it was a little bit of a longer one today, but a lot of stuff came out. I couldn't not talk about this Uber IPO. I just couldn't. Yeah, so I got for you. Take care. Thanks for tuning in, and I hope to see you in our trading room. We do it every day, 9 11 a.m., Monday to Friday. We have an awesome community that I can't wait for you to meet. See you there. Goodbye. All right, trade pros, let's turn all this yapping into profit. That's what the trading room is for. Let's take all this analysis, all this opinion, and let's just boil it down to a few simple levels, a few simple trade ideas, and a few opportunities to get paid and get out of the office. Because that's my motive.